Yo, what up, guys? Traders and investors, Camilo here. I hope you are well. So, before we dive into this here, I'm gonna just quickly tell you that we're gonna be going back and forth into the charts in different time frames, and I want to show you guys something. Okay, so what if this is a question that has me thinking today? Okay, and I'm sharing my thoughts here with you guys. What if today was actually the market top? Okay, well, here's why I'm asking this question to myself and why the pullback in this last 2 days is different and why it matters. All right, before we dive into the video, you already know what to do. I'm gonna brainwash you here real quick. So subscribe to the channel, click on the like button, and hit that bell notification so you'll be notified when I upload these videos and you don't miss a thing. All right, guys, so think about this. Okay, think about what I'm about to say. This week, since over the weekend before the actual week started, okay, we had 5 events up until today happened, okay, simultaneously, all at the same time. Okay, so what are these events, or what are these things that I'm talking about? Okay, number one, tensions in the Middle East, right? As you guys are very well aware of, you guys know what's going on. Okay, number two, China economic slowdown. Okay, there was a news data coming out over the weekend also indicating a slowdown in their economic growth, thus giving concerns of the overall global economy. Okay, number three, the variant concerns. Okay, number four, retail sales below expectations. And number five, what happened today. And what happened today was pretty critical. Okay, something that everybody was wondering when it would happen, and that is the Fed minutes giving guidance on taper talks. Okay, when they will start or stop their bond purchasing program that helped the markets rally. Okay, so those 5 things simultaneously happening this week is why it has me thinking that perhaps the top has already been reached in the overall rally from the March COVID lows. Okay, I know we've had pullbacks here in the charts before, but none of them really kind of stood out based on sort of external catalyst, right? That gave us some sort of idea that, okay, maybe this is the top. I mean, everybody has been concerned and been worrying about when this top is going to come, but no true or big events simultaneously happen all at once that I recall of. If you guys know of any, I mean, please correct me and write them down in the comment section below, and let's exchange our thesis and our stories here so that we can all be on the same page. But that's my thinking. All right, so dive into the chart. Look, this is what the wave count of the overall, if this whole rally here, okay, I'm gonna switch to my other count here, the alternate count. This is this chart here. I'm gonna turn on the wave, the labels here in just a minute, but this from the rally here of the cover lows, right? We've essentially rallied all the way up here. Okay, thus giving us a yielding at least a, let's take a look, roughly 100%. Okay, that was news not too long ago. The S&P doubled. All right, what is that wave count look like if this is the top? So here it is. I'm turning it on. So I brought this up to you guys a while ago, okay, in that from the March lows we went up in 1 in the intermediate degree, down in 2, up in 1 minor degree, down in 2, 3, 4, 5 to form the overall wave 3 in the intermediate degree, down in 4, up in 5, and completed the primary degree wave 1. Okay, so as I've been mentioning to you guys, this is very well a possibility. I have some fib zones that also come in confluence with that, but I'm not gonna dive into them just yet. I still have some work to do on it, but the count is suggesting that we have reached the top in the primary degree wave 1. Now, this is not what I prefer. Obviously, there still needs to be some digestion of what happened today in regards to the Fed meeting minutes, but that is my overall thinking. Okay, today's volume was pretty aggressive. Okay, we also see our RSI forming a divergence, as well as our MACD and our histogram ticking lower. Okay, volume increasingly into the above average, but in the selling pressure, again RSI ticking lower, while price action was all was going higher. Now, this is just not the worst case, because look, essentially what this really does mean to you guys and to us obviously is that if you or I or anybody here missed this entire rally here that I just highlighted, okay, it's fine. You always have to have some cash reserves or raise some cash and leave it on the side for when things like this may happen. Okay, and that is because we can potentially see this ABC pullback in the wave 2 of the primary degree unfold. Okay, and when this starts happening, we'll take a good opportunity to start loading up in long-term positions for our long-term portfolios, which I've stressed to you guys enough. You guys have to have a long-term portfolio. Okay, it's good to trade options, it's good to trade daily, weekly, whatever, but set aside a bigger chunk of your account towards that long-term portfolio, because over time that grows. Okay, it's better to time, it's better is what was the saying goes, is better time the market than timing the market, something like that. I'll get back to you on that. But the point is this, right? The longer you have time in the market, the better it is for your stocks, right? Because the less riskier they become. But if you're trying to time the market, it's not going to be too good for you. So, trade your options contract, trade your accounts, right? Have a small portion of it to play with. But my suggestion is, this is what I do, is that I do have a long-term portfolio with a bunch of stocks. So I am anticipating and waiting for this opportunity so I can load up on some of those names, as you should too. All right, so how will we trade this should this be the outcome? I mean, what the really tell will be this, right? If we actually break below south of the 50-day simple moving average, right, as you can see here, has been holding support since let's call it November the 4th of last year. Okay, we've held support for that long, and now we're gonna see if we can back test it again and hold it as support. Okay, but should we fail, we look to go down in A, up in B. Wave B is where we will take advantage for a put side trade to take us lower into the wave C of primary degree wave 2. Now, where this sets in is yet to be determined, because we have not confirmed this low yet. We will know. All right, so that's pretty much what I wanted to discuss with you guys today. Okay, be on the lookout, because this, what's been happening lately globally is important. And what the meeting minutes from the Fed talks were displaying today is that they are going to stop the bond purchasing program. However, they're not going to raise interest rates not until November, December, which is already priced in of next year, not this year, next one. All right, so that being said, just be on the lookout for this. Be very careful. Watch out for the 50-day simple moving average. Watch for it to be to hold that support before we make any rational decisions in taking on the upside trades. Just be patient. So over to our preferred interpretation. Okay, here it is, and I'm going to show you guys the overall count in a daily time frame and how that differs from our sort of not favorable but not bearish count. But this is what it looks like. All right, so I'm going to turn on the labels here, and where in the count that I just presented to you guys, wave 1 in the primary degree had ended here. Okay, let me turn on our moving averages. Okay, wave 1 completed on September the 1st high. We went down in ABC to form primary degree wave 2, and now we are within the wave structure of the primary degree wave 3, which indicates we still have a long process. Another bull market, not a bull market, I'm sorry, we're halfway through the structure there. So we are in the minor degree wave 3. Okay, we're still yet to hit the 100% extension of this wave 1 versus wave 2. Okay, and so wave count invalidation of this here comes in at the break of the high. Also, these are two levels that we're watching, right? We're watching the 50-day simple moving average back test, and we're going to be watching this level here, which is 423.07. If that invalidates, then chances are that we've already hit the high and primary degree wave 1, which is in the previous count, has set in. Now, taking you guys down to the 1 hour time frame, let's dissect and review what happened today. Okay, so let me turn on these labels here, sorry, the moving averages, and let's review. So of the July 19th lows, right, which came in at the 38.2% retracement, wave 4, we went up in 1, ABC down in 2. Now this wave structure here was pretty choppy and complicated to track, but we did a good job in keeping patient, and we still held our patience throughout this entire move here. Now this wave C came into support at the 23.6% retracement. Okay, we rallied, we gapped down, and we started moving on slowly. We made new highs but broke below it, didn't quite much hold it, and then we actually finally broke out, establishing a zone here of support. Now when we gap lower here, okay, and then we rallied, this sort of had us thinking that maybe wave 1 had finished here and that wave 2 was here, and now we were rallying up higher. But what ended up happening is that we broke below key fib levels, which I discussed in yesterday's video that you should guys go watch, and we're now determining that this is still the wave 2 pullback in this wave structure. Now support levels come in here at the 618, which were they broke below the 786 and the previous all-time high in the B wave. Okay, so I anticipate that this may be the case, that we may find support here, because if we start selling off, okay, and we break below this zone here, let me highlight this for you guys, this area here, okay, and to fill this gap below, which potentially at some point it may fill, who knows. But if we start doing that and breaking below these zones, you know, 436.16 all the way down to 435.63, then we need to reevaluate this count, but not yet discounting the fact that we may be in our bearish count. All right, guys, so that's pretty much sort of like my outlook of what I am, or the game plan coming into this week and the following, because there's a lot going on and you guys should be very, 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 very careful. Okay, if you guys need a team, I mean, obviously it's always good to have one. Join Trending Waves. The link to the Discord group will be pinned down in the comment section. We discuss these things every single day. We post Elliott Waves charts. We form an analysis and a game plan to execute these markets. Now over to the Qs. I'm using the SPY. I'm not going to show you guys what I had in the Qs as in regards to the sort of bearish count, because that's for the members. But I'm just use the SPY as a gauge to understand what that could be. Now this here, I did call this yesterday, and that if we started heading on lower, this could be the count. Now we're finding support here in this trend line, sort of support area, that if you will, right? And we are looking to see if we can hold it. Let me just fix this here for you guys real quick. All right, so this would be the wave 5 of wave C or wave 4. If the SPY continues and now we find support at those levels that I just mentioned, the 78.6, okay, and we start heading on higher, then this expect the wave 4 to complete here. Now over to the SMH. The SMH is also in this wave 2 pullback. Okay, so up in 1, ABC pullback into the wave 2. We're looking for a support area between the 246 and 241 area, which comes into the 38.2 and the 50% retracement of wave 2 compared to, or that retracement rather, of this wave 1 advance. Over to IWM, small caps. Small caps is holding up just ever so slightly. It's defending the 618 quite well. Okay, so off the wave 4 in the primary and the intermediate degree, we went up in 1, 2, 3, 4, and 5. Minor degree wave 1, ABC sell off into the wave 2, finding support at the 618 and 78.6% retracement. Now that's it for today. I hope you guys understood what I am looking for in the SPY coming into this week. This was a pretty decent sell-off. Okay, I mean, we've seen worse, right? We saw this massive sell-off here. It's not yet a correction. A correction is anything above 5% in the to the downside. This is still just a very much so pullback. Okay, we've only been down about just shy of 2%, while this one was roughly 3-4%. We also have several other pullbacks here that we can consider, but nothing yet has been anything past the 5% threshold. Let's take a look here. Okay, here was a brief correction. Okay, but this happened on March 2021. Okay, so it's been a while since we've seen something along those lines, roughly 167 days, if you will. All right, guys, so that is pretty much it for me. I hope you guys understood. I hope you guys understood the game plan, what we're looking for coming into this week or this month. Okay, again, you know, we also have a very slow month as August. A lot of people are still out, not on their desk, and so yeah, so just be careful. All right, join Trending Waves, subscribe to the channel, hit the like button, and I shall see you guys bright and early tomorrow. Take care. Bye bye.